right. Good morning, everybody. How's everyone doing out there?
I'm great, Rob. How are you? Welcome, Zinger Nation.
Yeah, appreciate it. Thank you. Thank you. I'm doing great. What a great day, huh? Markets are moving. Life is good.
Yes, sir. All right. Well, I'm going to pop off, let you do your thing, but I'll be here in the background producing for you. And if you need anything, just let me know.
Will do. I appreciate it. All right. Welcome, everyone. Hope you're having a good day. Let me make sure y'all can hear me. If you go ahead and give me number one. Hey, good morning, Brandy. Thank you. I appreciate it. All right. Very good. Let's go ahead and get rocking here. Markets are open. Looks like we tipped down to the downside a little bit this morning, or opening rather. We pulled back a little bit from where we were. Let's take a quick look at yesterday's market with the S&P, see where that finished up, and we'll get an idea as she opens up. So we had this nice overall bearish trend yesterday. A couple of good retracements off of the moving averages as entry opportunities, both morning and afternoon, to take some entry opportunities, entry choices there on S&P. When we look at the Nasdaq, which of course is its own entity, similar pattern, just not as strong of a move. All of the breakouts yesterday were big. Right, if I zoom in on this, you can see this breakout that came here right early in the day, broke the moving averages, big candle. Kind of flooded around, big candle. Big candle, when we retested, all big candles. So either be there or be square. If you were not prepared for these yesterday, there was no way to take advantage of it. Obviously, we're not trading on, and well, I shouldn't say that. I'm not trading on Nasdaq. I would be trading Qs if I were trading it. But I am looking at these large moves that took place where the S&P 500, just a little bit of a smoother transaction or transition that seems to take place. Let me sort by symbol there. That seems to take place just overall, right? Big candle still, but not as harsh as what we have on Nasdaq. But overall, some really nice entry opportunities yesterday. I want to look at a couple of stocks right on the open today and see if there's something we can't do. Many of you know who I am. You come and see me on the options show on Friday afternoon. If not, write it down. 2 p.m. Friday afternoon. Every week we do this show called Options Explained. I'm an options trader, guys. Those of you that are stock traders, nothing wrong with that. You can take my trade setups, convert them over to stock versus options and use them the exact same way. The difference is I get to leverage my positions. Instead of me buying a $10 or a $20 stock, I'd rather go buy an option on a $150 stock and pay that same $8 or $10 or $15 for the option than buying the actual equity itself, because I am in now a leveraged position. So tremendous fan of options. The only time I buy the equity is when I'm doing trades like a covered call, where it requires a two-part system that you actually own the equity, you actually own the stock. So there you go. Stay positive. All right. DKS calls, Brandy. Cool. All right. Just checking, make sure I didn't miss anything. Hey, Voodoo, how you doing? Good to see you here, my friend. All right. Markets just opened. So we got about 60 points to the upside and the down. Not too bad. Nasdaq's not printing just yet. We got S&P 500 is down 7. I want to switch over right away to the SPY. And we'll let things kind of settle out for a minute or so before doing anything. But we got a nice gap up on the SPY. So there's a phrase you're going to hear me use. If you follow anything that I do, the phrase, a phrase that I use over and over again is look left. You better get really good at looking to the left and seeing what's going on. Are there other resistances, supports, and so forth in that area? If we look here at SPY, just take this down. I'll make it a little bit bigger once it comes in. All right. If we look at SPY, 417.91 is a major support level for us on our fibs. So 417.91, that's where we were. We took a gap up off of that on that 417.91 on SPY. And we're looking at 422.5 as a resistance level. So there's a target if you're looking for where we go to next. It's not only a fib level, it's also an all-time high and a near closing high right in there as well on those levels. So it's given us some great resistances at that point. If we go and look, and again, guys, you could chase after your first candle here, but you will find, unless you are a very specific mindset, you will find that that first candle will mess with you pretty intensely if you are not really, really concise on your entries and your management of the position. There's too much whipsaw that takes place at times on positions right at, let's see, why didn't that come up? Let's go look at Amazon right at that point. Look at that wick. That's what I'm talking about, guys and gals, right? Look at that wick today. If you jumped in on Amazon saying, ooh, I've got a buying opportunity, I mean, that was just a massive move. And there's a 5-minute candle. All within that very short period of time, we have got a tremendous, tremendous movement around there, 32.65 to 32.75. Now, a lot of money to be made in there if you're catching it correctly. If we look at the options, if I'm day trading Amazon today, I'm looking at this option right now. It's about a $2 bid-ask spread on the 3250s. It's about a $2 bid-ask spread on there. So not crazy. It'll come down a little bit normally throughout the day, a little bit lower than the $2. But on the open, you're always going to see these higher bid-ask spreads as the market makers are A, filling market orders, B, filling the excitement of the market just opening up. So they've widened that spread a little bit because the market also has not yet settled in. So they just want to make sure that they don't get caught on the wrong side. They, the market maker, get caught on the wrong side of a transaction. Amazon's an expensive one. If we look at SPY, SPY has options that expire every single, let me go here. Every single week, there are 3 times a week that we have options expiration on SPY. So when we look, the first expiration, today is Wednesday, is today. We want to find a 65 to 85 delta. When I am day trading most positions, I look closer to that 65 as my delta that I'm looking for. When I day trade the S&P 500, I'm looking closer to that 80 or 85 level. I'd rather pay a little bit more and get a real quick move on my position because the SPY doesn't move like an Amazon does, which is one of my favorite stocks to trade, or a Booking, or a Chipotle Mexican Grill, or a Google. It doesn't move the same as them. So I would rather have a little more fudge, hedgeroom in there, and I'm not paying a lot of cash for it. Guys, you can control the S&P 500 for those that don't trade options for about $2.50. That is phenomenal. Right? You're buying the 417 call is what it would be. There's only a 3 to 5 cents bid-ask spread. It's tightening up a little bit as we go along. But overall, nice. We haven't had anything for a pullback yet. So there's nothing that tells me, take this. I am not a breakout trader. I am a retest trader. I would rather see a retest and a bounce than I would try to take the breakout. And Amazon was the exact reason for it. If we look at Google, look at the movement on Google. Look where we opened. Look where we ran. Look where we came back. Tremendous overall movement there. 23.66 up to 23.72 in that first 5-minute candle. That candle just printed. It's done. We now open with that new candle. That's what that little countdown is there to tell us how much time left in that recent candle that we have. Brandy said, biggest thing I don't understand is estimating pricing. Is there an easy-ish way to do that, like pre-market, let's say no volatility and volume matter, of course. Brandy, are you talking about where the position opens or how it moves? Let me know what you mean with that. Drop that in the chat there. Hey, Voodoo, I appreciate it. Check out our 12 p.m. show I do on our website every week. Oh, nice move there on Google. Let's see. Google is one of them that I trade every day. We're looking for a pullback to the moving average for an entry on Google. I have my sheet right here of the things I'm looking for. Each and every day, I fill this sheet out on 20 stocks. It gives me my targets, my entry rules, and my day trading it. What am I looking for? And so forth. All right. So let's go look at who is actually moving right now. So right now we have, I'm going to sort by net change. All right, Chipotle Mexico. Yeah, Chipotle is the biggest one right now. They're up about $17. Booking is up $16. Google is up $13. All right. So let's go ahead and take a look one by one. Chipotle Mexican Grill. I like Chipotle, guys, but you have to understand Chipotle is not for the faint of heart, nor is Google Google is a little bit better, nor is Booking. Amazon is fine. Amazon is not as big a bid-ask spread. There's plenty of open interest out there. I'm not too concerned with that, right? A copy of what sheet, Steve, of what I've got here. This is done after today. Let me see how we can do that, Steve. Let me figure that out. You go to wealthbuildershq.com, guys, and you could go ahead and there's a chat button in there. Contact us, and you can send an email. Actually, that'd be the best way, Steve. Go ahead and do that. You could send an email in for that. I don't have any way of getting this to you now because I'm a paper guy. I don't type it up. I write it up. It's in front of me. I'm not looking at the computer. My screens, when I'm trading, guys, I have 6 monitors on this system. When I am trading, every monitor is filled with a chart or a series of charts. Most of what I trade looks like this. That's most of what my screens look like right here. I want to be able to see what the overall position is doing on multiple stocks, on multiple screens, the ones I'm looking at, without having to change symbols over. For today, I can only use the one screen, so everything focuses on this one screen right here. Actually, you know what, Steve? Let me see. You know what? Let me try this. Hold on. Let me try to grab something here. I have zero issue sharing with you guys the positions that we track. So actually, this is today's. Here you go. This is today's sheet. All right, here's all my symbols that we're looking at right in here. This is my bias. You've got U is up, bullish. D is down, bearish. I tried to put B for bullish, B for bearish. It didn't work. I just figured that would. U is up, D is down. That's my bullish, bearish. Bullish neutral is UN. Bearish neutral is DN. And N is neutral. We got a couple of earnings candidates coming out, right? Earnings on NVIDIA today. And I'm pretty sure W Day was today. Yep, both of them are today. I don't remember what time of the day, but they're both today, right? What I'm looking for, bearish below 1342 on Chipotle Mexican Grill, right? Bullish on PayPal if it pulls back to the 8 and bounces. This is my sheet. So, Steve, this is exactly what I got there. So, screenshot it, and it's all yours. All right, let's see. Hey, thanks, guys. I appreciate you dropping that link in. All right, let me shut this down for now, and let's go back and check it out. So one of the trade setups, guys, that I am very much known for is it's called a zero line breakout trade. And basically what I'm looking at is this. I have an indicator that I use that is very near and dear to my heart. I didn't create it, although I have made modifications, or that's the wrong word, discoveries about the indicator since I've been using it since 1997 when my very first mentor in the market taught it to me. His name was Vaskin Martin. And it is called Fibonacci. Now, some of you, I'm sure, have heard of it. There might be a few that use it. Actually, if you do use Fibonacci, drop a 1 in the chat box. I'd love to know how many of you are actually using Fibs as an indicator for your trading. Right? I love Fibonacci. To me, it is the only true forward projecting indicator where most other indicators like the MACDs and the stochastics of the world are laggard indicators. And that's because Fibonacci works off human emotion. And if you don't believe that, if you've ever looked at a piece of art or a piece of furniture, a house, a person, and you look at a person and go, nice guy, but something's off a little bit, right? Think of a human being that your fingers dragged on the floor, right? Think of that. How attractive would that be? It's not. If you look at George Clooney and you put a Fibonacci mask over his face, he has a near perfect face. And there are many actors and actresses and others that you could do with. I have something on my phone. I do it with my nieces and nephews all the time, and they kind of compete against each other with it. It's called the Fibonacci mask. And it shows you how perfect things are in alignment with what the human mind wants to see. The thing about it is, You don't know you want to see it. It's internal to your brain. It just happens. It's no different with stocks. Why do stocks move to the middle of nowhere and never, ever get any further than that? Or fail from that point, or bounce from that point? That is because they are key levels, Fibonacci levels that most traders do not even know exist. You can call it all of the voodoo or the hype and the hoopla and all of that stuff that you want to. You can do say any of that. Guys, I will tell you this, right? Since we're sharing this sheet, right? I will tell you this. Right now, this was done. I did this update yesterday for today. We lost $4,800 over the last, since Friday's close. We lost $4,800 on 2 trades, right? We are up $488,748 in our sim account, all right? Trading these same 20 stocks that I just shared with you guys, right? All of this is off of Fibonacci, all right? So with that being said, let's go ahead and take a look at the charts. And I want to give you some setups that I want to teach you the setup. And I want to give you some candidates that have an opportunity right now as potential trade setups. All right. We got quite a few of you dropping ones in there. Yes, Clyde, we are talking about a Fibonacci retracement. So crypto morning show. So you added 886. I modified my numbers here for a reason. I went ahead and tested about 3.5 million. 3.5 million Fibonacci line sets, and found that if I change the 786 to the 764, I have a better, I get a better bounce off of that. And we actually have a trade setup that comes off of that called the Fibonacci 4-step. And what I did then is my edit, you put in 886, you're close enough, right? Mine is just the way that I tend to trade. Nothing wrong with the 886, it works. Mine is the 882. And what I did was, I need a drawing tool. Let me go ahead and start up another program and get a drawing tool going. What I did was the 236, that's 0.236, right? In decimals, that's what 764 is now. It's 0.236 in decimal speak. Let me hit record. I'm not actually recording this. I'm going to stop it. I just need to be able to use a pen. There we go. I hit record again. I hit delete instead of stop. All right, so now I can grab a pen. So that 764 is now, that red line is 0.236 from the blue line. So I have a consistency, a confluence inside of here, right? This midpoint, which I call a Fibot, F-I-B-O-T, trademark, it's mine. Been using it for over 20 years now. Right? That Fibot is a split of these two levels when needed. It doesn't always go in. It's when needed, right? Certain trade setups require it. This trade setup that I'm going to teach to you requires a Fibot to be added to our chart, right? So as we're looking in here, let me bring up, let's do this. Let me put this here. Let's put this here. Let's pull that out there. Just to get it up the screen. I just want to give you guys as much visibility on the screen as possible. All right. Let's see. So first thing is I want to share with you the fib on the chart. If I go over to a template that has no lines on it, so George said, the reality is focus. If you just concentrate on a couple and watch them, you'll intuitively have a better feel. Without a doubt, George, which is why these 20 are the same ones we've traded for years. We occasionally change one, but not very often. Here, actually, I'll show you that. Our change log for this year was January. We took away Biogen and Win and added PayPal and SPY. We haven't changed anything since then on our list. Right? And I know how each and every position performs for us. Let me just take this off. I just want to make sure I grab the right page here. Let me see. Yeah, that'll do it. Okay. So here was till April 30th. We know exactly how much each position brought in P&L, right? For each one, Apple was the only company that we lost money on for that first quarter, 4 months, that first 4 months, right? You can see how much we made on each one, how many trades we did, how many winners and losers. We put the current stock price at that point, our win and lose ratio, P&L per trade, right? And then we graded them with green, yellow, red, right? And then we left white, which in there as well. But and then percentage of profits to give us an idea of where the largest parts of our profits came from. So I would not be surprised that Amazon is a big part of our profits, nor Booking, nor CMG, nor Google. Why? It's relate the price back to the dollar movement, take the stock price versus the dollar movement in that profit movement. And it's expected that we're going to have higher numbers in there, right? But then we start to see things like United Healthcare. I only made 2.85%, but on United Healthcare, we got $12,000 in profit. I'm ecstatic about that. Roku, we've got $29,000 in profit on Roku, right? And so on and so forth. Even Facebook, with all the craziness they went through this year, we've got $17,000 in profit, and that's on 7 trades, right? Which means we made $2,540 per trade. So I agree with you 1,000,000%, George. You need to focus. You need to focus on a handful of candidates. And I tell my students all the time, you're probably not trading all of these. If you're trading Amazon and you're trading Google and CMG and Booking, the ones that I trade, you're probably not trading some of the lower priced ones that are out there. Now, or the lower movers. So Home Depot, as an example, great company, but it's okay. If you're into excitement, Home Depot is not it, right? Unless you like 2x4s. That's as exciting as it gets for me. So you'll take 4 or 5 or 6 of these that I have, and you'll add 4 or 5 or 6 of your own, make about 8 or 10 candidates, and you watch them every single day. Every day. I'm able to manage 20 positions, all 20 of these fairly easily, but I don't normally have more than 3 to 5, 6 open trades. We start getting to 7, 8, 10 open trades. That becomes a bit of an issue for me. That gets a little concerning to me. Yes, Vintage, I absolutely will go through and share with you what we're doing on Fibs. I'm going to show you how we do this one trade setup. Guys, here's the thing. Fibonacci takes a while to learn, right? I talk Fibs all the time in the option show on Friday afternoon, right? So wherever I'm at, guys, track me down. I mean, learn this stuff, right? I know from the feedback I see how positive people view this, and some of the stuff that we do here. I mean, I had Voodoo, I think it was you, that was telling me that we did the AEE. I think it was AEE and another trade that I gave that next day, and you said both of them crushed it, right? And you did take them, didn't take them, I don't remember, but both of them had crushed it, right? And guys, that's what it's about. My trade setups are not meant to meander. If today becomes a stage 1 chair day for me, what does that mean? This is stage 1. I'm sitting back, cannot reach the keyboard. I'm watching the markets, chilling out, and just see what happens. If that's what today is for me, that's okay. That is okay. I will not force a trade just so I have something to do. I've done enough of those in my lifetime. Sorry, my allergies are killing me, Tate. I've done enough of those in my lifetime that I will never go back to doing that again, ever. Took the RUT trade profitable. Excellent. Good, Voodoo. Yeah, we're going to look at RUT if we have time today for a setup on RUT. Because, guys, this is a trade that can pay your mortgage, pay your car payment, pay your rent every single month with a very low risk of being wrong in this trade. About 6 or 8% chance of being wrong in the trade. Yeah, Voodoo said, awesome setup on the iron counter. That's what we're going to look at. So let's go ahead and look. I know it might be a little small, but I need to lay out for you. Actually, you know what? No, let's do this way. Let me do it like this. Let me back this up, find the beginning of the fib, and I'll just be zoomed in a little bit on it for you. There we go. All right. So if I grab my drawing tool now, what we're looking for is the largest directional move closest to the right side of the chart. And that's what we had here. We want to see this V bottom take place. I would rather not see this little kind of meander. Personally, I like a sharp change, V. Right? We get a nice move up. I would call this a bullish thrusting pattern. We get a sideways move. We just kind of falafeled around in there. Quick move up, rising 3 type pattern. We push up here, and there is my V in my top. Okay? And one of the ways to know that you are probably in the right place, now, not exactly, not guaranteed, probably in the right place, is when you get the pullback. Once you drew your fibs, if you pull back to the 236, 236 has a very key importance to what that is, and that level is hesitation. Write it down. 236, hesitation. 764, hesitation. They are all hesitation levels. Write them down. Write that down. Guys, stocks tend to hesitate there. That doesn't mean it's going up. It doesn't mean it's going down. It just means we hesitate at that level. We came down 1, 2, 3, 4 days. That's hesitation. We gapped down. We came back up. We played around it here. We played around it here. And as you go forward, you'll see that happening. So now here's the decision you've got to make, right? As a trader, you drew this Fibonacci in here. And the trade setup that I'm going to share with you is a breakout of the 0 line. So in this case, because it was a bullish pattern, we moved up. Because it's a bullish pattern, we're looking for a breakout to the upside. So what does that mean? We're going to keep going until we find a day that breaks out. All right, we got close there. All right, so we got a little bit of a breakout there. All right, little bit of a breakout above that 0 line right now on a close. So here's what normally takes place. Traders are looking at this now going, ooh, tomorrow, if it moves up, I'm taking this trade. Or they take the breakout today on this, right? And we got the move up, and then it quickly pulled back. So you might have got some profit. For me, my profit would have been this horizontal line right here, my profit target. So I didn't get anything on that trade. All right, so what happens the next day? Oh, goodness gracious. That is a normal thing that happens on breakouts. Guys, go check this out. Draw fibs like this. Go back and look on the breakouts and see what takes place. All right? Now what? Okay, we got another breakout. So here, phase 3 of my chair, right here, phase 1. This is me. I'm sitting like this. I'm watching it. The next day, we gap up. Now I am in a straight up position. I am not leaning forward. I am in a straight up position. I'm paying attention to this. I don't personally want to take the breakout. I want to take a retest of that 0 line. And because I'm so zoomed in, it's a little hard to see what the 0 line, well, I can't see it, but let's see. It's about 84 bucks is that 0 line. So we go one more day. All right. We gapped down, right, to here. We failed. Well, we gapped down, we bounced, and we came back. So would that have been an opportunity to take the trade on the bounce? Looking at that 5-minute chart, we would make that determination. But yes, there was a potential to take that trade in there. But it went against us. Yes, trades will go against you. Anybody that tells you you will always win lies. They lie. And I will call them a liar to their face. You will not always win. I knew somebody one time, he said, I have never lost on a trade. He was teaching people this. Follow me, I've never lost on a trade. I'm a stock buyer. I go watch him one day, and he's buying stocks, and somebody had typed in the chat, what are we doing with such and such stock? He said, we're just holding it. And I came to find out the stock was trading at, I don't know, $1 or $2. They bought it at 26, 28 bucks 8 months ago. They never sold it. Well, I didn't lose any money on it. Come on, that's a bunch of hogwash. All right? Loss of opportunity, loss of capital, whatever you want to call it. You lost money on that trade. Oh, but it may come back someday. Yeah, and if all my stocks go from 28 to 2, and I'm hoping they all come back, garbage. Absolute garbage. Guys, everything I do, fully above board. every single trade that I shared with you guys, every trade that I shared with you guys is right here documented. Every single, and done in front of a live group. I record this, well, live. I'm live, right? I record it, send it out immediately. I did this last evening about 4:45. By 5:30, 5:45 last night, it was already posted to the website. Students were able to watch the videos with all the things that are on this sheet, that are on this sheet. I type it for them, not for me, because they can't read my handwriting. With all things on this sheet, and I put it into a video, they know already what the rules are. We talk about each one of them inside of that. So I don't pull any punches, guys. I trade the market. This is what I do. Do I teach? Yes. Am I paid to teach? Yes. Do I get a lot of money for teaching? Yes. Am I bothered by that? No. I have a specialized skill that if you follow what I do and you learn how to do it, it could give you a phenomenal rate of return. The potential is there. I believe you are paid for what you know in life, right? And here we're doing all of this for free, right? Because I also believe that the only way to have people learn how to trade is to start teaching them the right way, because there's so much garbage that you can watch on the internet out there that most traders are not traders. They're just talking about something that they learned one time. Oh, I'm a crypto trader. Or here, I love this one. Bought a house with GameStop. Follow me. Great. You got lucky on one stock and now you're a guru. We call that the Superman effect. You believe you're invincible. So might have been stopped out. Actually, would I have been stopped out of this trade? Probably not. I probably would have had my stop down here about 83. So I'd be okay at this point. Right? Let's see. Stopped out there. All right. Now what? So we gapped up and we failed. See, so there's trying to take that breakout in there. Watch. Okay, so we got this breakout and then we failed. See, trying to take the breakout to me is a problem. I do like in this last attack that we were able to get up to that 86 and a quarter-ish line right there. I do like that. All right, let's see. We're going back, we're going back, we're going back. But I am waiting for the right setup. But Rob, I wait forever. All I do is look at my charts every day. It takes me all of 5 minutes, and I know we're kind of off the chart here a little bit, but we'll get back because this is a candidate right now. Okay. All right. So position number one on the chair, back here. This is where I'm at. Next day, I go from number one to position number two. What am I looking for? A retest intraday of that $84 level. Did I get it? Yes, I did. I opened up here, came back intraday, and I bounced. I take the entry on the trade right there. All right? Boom. Boom. That is what I'm looking for, ladies and gentlemen, right there. That entry opportunity gave me a breakout, which said, yes, we're considering moving up, a retest, and a bounce. And the bounce said there are traders backing it up, not just some looky-loo, some market maker, some floor trader trying to push a trade to see if it's going to explode from this point forward. That right there is what we look for. This is called, write it down, a zero-line breakout trade. Zero-line breakout trade. So what am I looking for? Close above the zero line, which is what we have right here. Close above the zero line. Retest and bounce. Retest the zero line and bounce, which could be the next day. It could be 2 days later. You may want it to close near, like it did here, and then you take the next day as the entry. I took the entry on the intraday bounce right there. We exited half of our trade right at just below that line. That's resistance, so we're always going to be below it, right? But we're talking about that line is 86.25, and we had a high here of 86.17. 8 cents away. My stop will definitely be lower than 8 cents away from a line. So we're out of half of the trade. We move our stop to break even at least, maybe a little bit higher, but at least break even. So no matter what, we're not giving anything back on the second half of the trade. We're still in the second half. All right, we're stopped out of the second half of the trade. We did 10 contracts. We sold 5. We moved from 84 to 86. We made a $2 move on the stock, which means we made about a $1.50 move on the option. So on the first 5 contracts, we make $750. The second half of the options, we made nothing. We broke even. All right, I'm good. I have no problem with that. Right? Comes back down, comes up again, boom, in the trade. All right, boom. Number 2, same exact setup, guys. Same setup. We got the breakout, we got a retest, and we got a bounce. Took a couple of days, but another $750. Move our stop to break even. We're stopped out of the second half of the trade. See, head fake. Here, kitty, 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 kitty. That's what they're doing right there. Here, kitty, kitty. This is AEE, Apple, Edward. Yeah, guys, they dropped. Okay, so Benzinga just dropped a link in, guys, called tradewithrob.com/go. And that's for you guys at Benzinga. That's why that go is there. And it takes you to a page where this trade setup, I send these out 2 to 3 times a week for free. For free. And when I send them out with not only a video, but I give you the instructions on exactly how to trade it and what we're looking for. They're not all meant that it's going to happen tomorrow morning. You're going to take the trade. Sometimes it means you're going to wait a day or so, but it's a trade setup that we're looking at. And I look for these every day. If I find them 5 days a week where they're really good, I'll send it out 5 times a week. If I find it twice a week, I send it out twice a week. I'll always find 2 or 3 a week. All right, we pull back, we get back above, we gapped up, so you'd have a decision to make there. If it's too big of a gap, or were you going to take that trade? Right, and now where are we? We're back to where we started. Let me go ahead and, by the way, that arrow that I've got drawn there, that was a Trade with Rob trade that we put out there. That was a Trade with Rob trade, right, on that particular day. Let me see. Who did I just... Let me see. This was last night's trade. Okay. We need a retest of the 80 and a fail. Our first target is 74.5. Our second target is 68.5 with a stop at 83. That's it, guys. Whether you trade the options, whether you trade the stock, whatever it is, you could trade this the exact same way. Short the stock, buy a put option. Either way, it works. All right. So this is free, guys. At least twice a week, we send a video out of this. Right? At least 2 times a week. Let me see. Yeah, guys, nope. All you need is to put in your name and email address, and if you want it texted to you, we'll text it as well as email it. If not, no harm, no foul. I don't care. I just want to get it to you. Right, making money and hurting feelings with the truth. Yeah. Amen, altcoin. So, Clyde, I primarily do options. Correct. I'm a covered call trader as well, which means we buy stock. But if I could show you how on a leveraged position, look, and I'm not trying to justify it, guys, because I know where the value is. If you tried to buy Chipotle Mexican Grill, we got in when Chipotle was at $13.49. Actually, if I grab a pen, it would probably be easier to share it with you. Right? We got in when Chipotle was at $13.49. We got out when Chipotle was at $13.30. So, excuse me, that was a 19-point drop. We did 4 contracts to do this, right? If you did 400 shares at $1,349, $1,349. You needed $539,000 to do this trade. My options were weekly options. This was done on a Friday. My options cost me about $12. So for 5 or 8 grand, I was able to do the same exact trade, control 400 shares of Chipotle Mexican Grill, 400 shares, control them, and never, ever, ever have to either A, own them ever, or even have the cash available to own them. That's why I like options so much, guys. And I just chose the last trade we had there. whatever the last one was, right? And we just had done, 4 contracts of. That's the 4 right there, number of contracts. Clyde said, I am a newbie to options. Excellent, Clyde. That's exactly what I want. Guys, here's what I mean. If you take the 3 phases of a trader, you got someone that's brand new, someone that has traded a little bit, and someone that's experienced making money, okay? And there are more gradations, but let's just go with those 3. That new trader has a lot of stuff to go through and learn to become a successful trader. But you have no bad habits yet. If I can get to you early, I can train you better as a newer trader. If you already have the bad habits, what do? Throw you away and say, too bad, you got bad habits, you're done? No, we've got to go through some mindset things to fix those bad habits. And there's only about a dozen bad habits that traders tend to go through repeatedly. You do it again and again and again, and I am no different. I have to be very cautious on what I'm doing. If you notice in the background, I don't know if you can hear it, but I'll go quiet. There's music going on in the background. It's very faint. I don't even know what song it is. I can barely hear it. But I know as a trader, if I don't have what the trading psychiatrist or psychologist that I worked with called it structured noise. Not kids screaming, not dogs barking, not construction equipment, structured noise. My TV is always on over my left shoulder. CNBC is on, even if I don't, right now it's on, so I can glance over to see what's going on. But it's always on no matter what. Or radio is always on. There's always some kind of noise going on because I know for me, that's a mistake as a trader to not have that structured noise. For others, it drives them nuts, right? That structured noise. I know most of the lingo, but I want to learn it all. All right, there you go, Clyde. Well, we can help you with that. Options allow you to make the most possible money with the least amount of capital, right, altcoin, without stepping into Forex, which is fine if you're okay dealing with the major charges by pips from one Forex broker to the next. Or here, guys, I'm watching CNBC this morning and looking at Bitcoin. I bought some Bitcoin the other day after it dropped back down, that massive drop. I bought some Bitcoin. On Robinhood, there was almost $1,000 difference in price for the coin versus versus CNBC and what's on Robinhood. I don't know, guys. I mean, whoa, that's a lot of lingo, a lot of change. I don't know about you, but that's a lot. All right, so what are we looking at today, guys? AEE is, LMND is one of them, right? AEE is another one. So what am I looking at? I showed you the setup. I talked about the why. We don't want to just take the breakout. We want the retest and the bounce. If we get the move back up above the 84, retest and bounce, we're looking at 86.25 is our resistance level. That's target 1. Our next target is up here, resistance 88.5. So we're probably about 88, maybe 87.75, somewhere around there is where my target's going to be. Here we're looking at 85.75 is going to be my target. My stop's going to be right down here at about 82.5, 83, somewhere around there. Yeah, super true. I have to watch it again. Great show. Yeah, I appreciate it. Comment in there, guys. Hit the like, subscribe to this. Make sure you're watching what we do here, guys. I don't hold anything back. I am sharing with you stuff that, folks, my highest level coaching students that I coach one-on-one, personal one-on-one mentoring that I do with them. I'm sharing stuff with you that I share with them, right? I don't hold anything back. Can you help us understand time frame to use for fibs? Haven't found a right time frame. I primarily use them, Sal, on a daily chart, and then I drop down to a 5-minute. I don't really use them anywhere else. So where do you draw the zero line? It's not a matter of where I draw it. We're looking for the largest directional move closest to the right side of the chart. That was this here, this move. Once I drew it off of there, the zero line pops in automatically. Hope that makes sense, Steve. All right, so AEE is one of them. ARKW is another. Let me unscrunch. get me down. This is bearish, right? Look at my Fibonacci. Look at where the fib is drawn or how the fib is drawn. V top, strong directional move down. We made it back up to the hesitation level, right? We've done this, and here was the breakout, and then we came right back. We ran real quick. We came back. Not quite all the way. We came back. Let's see. Scrunch this down. We're going to add in a midpoint, which is the negative 136. There's our target. But you see, Rob, this worked. Yes, it worked, but what did it do? It opened here. On this day, it opened at the top of the body, closed here. The next day, it retested, and it failed. So there's the entry. Right? We moved up. It moved, but a little tough to take that one. If you're an intraday trader, potentially, you take the entry there as it failed, and you're back again. Right? Nothing else here. Get me below the 132.70 level. Retest and fail. About 125.5 and 117.5 are my two targets to the downside. Right? Stop being right about 137 on this one. All right? So that's ARKW. Hope you guys are writing these down. Let me look at one more. EFX. All right. You can see the fib. Let's draw it out. It's always easy to see what we're doing when you draw it. We go through here. We go through here. Oh, earnings. Yes. And we get a pullback. Nice. All right. Yes, we draw fibs. I love this. Dead air. I love that dead air when I'm drawing a fib. It just increases the strength of the overall move. We'll drop this down. I will add in a negative 136, which is just splitting these two levels in half. None of these have been able to make it up. None of them have been able to make it up there. All right. So I'd be a little more cautious with this one. All right. We've not had any luck getting up to that 244 level. Here, we'll do one more. EHTH. Okay. Great. Look at this, guys. Wow. There's the fib. Strong fib. Hesitation. Very strong. First breakout. Never quite made it down to that support level. All right. The next one was on earnings more than likely. Actually, no. Earnings are here. Oh, yeah. No, that would be earnings. That'd be earnings. All right. So we came back up. We retested and we failed. Actually, let me go ahead and bring this in a little bit. We retested here and we failed. We got pretty darn close. All right. Down in here. We came back again. And look, guys, the big breakout came back up again. It never really made it down, right? That big breakout is where the issue is. The breakouts, when they are a large breakout, are usually that head fake, right? The next day, we get the rest. It pulls back up, right? So you saw the breakout. You got the gap down the next day. You're like, yes, I'm in there. I'm going to take this bearish trade. I'm going to buy a put, and I'm going to let that sucker run. And then it reverses the very next day, and it's back up to the top. Retest the $66 level, fail and roll over, and we're looking at about 59.75 is going to be our first target, and then about 53 is our second target. That's what we're looking at in this trade setup. Guys, listen, I do this all the time. Zero line breakout is the main trade that we do in Trade with Rob. You'll have targets, you'll have stops. It's all free. There's no cost to it, nothing, right? So Clyde said, from where he put this, I've been doing it wrong. And Clyde, most people have. Most people have, Clyde. So, and without a doubt, most people do not know how to draw fibs the right way. I've been doing it now for over 20 years, and I was trained by somebody that was classically trained in this. He had a mentor that taught him fibs back in the day. Let's see. Clyde said, so you can put the zero line at the bottom of the high. Okay, so the zero line winds up, Clyde, depending on who might I not have fibs on. Let's see. I don't know who Dan is, so let's go to Dan. I have no clue. So if we're looking at Dan, and I don't really have a great place to draw a fib on this one, so I'm going to make it up, all right, to show an example. If I were drawing the fibs from here to here, my zero line winds up on the top because I drew in a bullish fashion. I started at the bottom, I drew up. If I drew on this drop right in here, started here and worked my way down, my zero line is now on the bottom. So it's not me putting it there. It's if the direction was bullish, my zero line will be on the top. If the direction of the pattern was bearish, my zero line will be on the bottom. Make sense, Clyde? Excellent. Okay. Beautiful. All right. So guys, go to tradewithrob.com/go and get yourself enrolled. It's a free training, a free video that we do a couple times a week. All right. Good, Clyde. Glad it makes sense. Glad it makes sense. Okay. Perfect. So Steve said, not so clear. Why do you choose a specific time frame? Because we're looking for, here's the phrase, Steve. You're looking for the largest directional move closest to the right side of the chart. Largest directional move closest to the right side of the chart. All right. Appreciate that, guys. Dropping that link in there. Thank you. All right. I'm going to delete these because they're not good fibs on either one of them. If we look at Amazon, actually, let's go look at Chipotle Mexican Grill. That has a fairly new Fibonacci on it. All right, there are rules associated with where we change the fib and when it's time to redraw. I'm not going to get into all of that here and now. Just understand that there are times we have to change them, right? The fib we drew on Chipotle, let me bring that in a little bit to see it, is fairly new. We just changed it a few days ago, right? When we got this gap up here, I think on this day is where we made the change. That's when we drew this new fib in there, right? The old one wasn't working any longer. We had it bullish. It had reversed and went down. So we redrew the fib at that point, right? So for this trade, it would be the breaking of that 1295 level that would give us the potential zero line breakout trade setup. All right. LMND is about to hit the zero line close to 80. How should we play it? All right. So if we look at LMND, you've got to first make the decision. Are you a trader that is looking for a close near there and then a fail the next day? Or are you looking to take the intraday move? I look for the close and then the change over intraday. So I don't remember all the details behind the LMND. That's why I love the charting program that I use, because it saves everything on there for me. So we've got 80.02. So for me, I want to see a close near the 80 today and then a fail. I'm really not looking for the intraday move to it and back. For me, I would rather see a close near it today, right? Especially with the market moving in an upward fashion right now. We get a rollover, that may be different. But if you had LMND, what I'd be looking for is you're going to go out and find an option on LMND that has at least 30 days of time available to it. I need a few more contracts here. Let's see. All right, perfect. At least a 30-day time period. I'm looking for a delta of 65 to 85, right? And I am looking to make sure my option is not overvalued. So the theoretical value is 976. We're trading at 720 by 850. little bit big of a spread. I'd rather not have some of that distance in there. But I would go ahead and buy this option, but my negotiation would be at the midpoint. I'd be looking to buy it at 850. At 790, sorry, at the midpoint. Hold on, my bad. What are we doing here? We're looking for bearish. Yeah, we're looking for bearish. So I need the puts. So let's minimize this. All right, so we're looking for that 65 to 85. I need more than that. So you're looking at 1310 by 1450. Wow. So when I look at the puts, I've got to spend 1380 on the puts, right? And that is a $90 strike. If I go back to the calls, and that 90 had a delta of 69. Okay. So let's go find a 69-ish delta here. If I look at the $74 calls, they're trading at 870. So look at the difference. Same delta. We're looking at 74 to, so about $5 away on the calls and $10 away on the puts. Same delta, and I am looking at paying, we'll call it $9 versus $14 for the puts versus the calls. So look at how much emphasis they're putting on those puts. They're jacking that price up, way overvalued on that option. Let's see. What was it? On the 90s? Well, actually not overvalued, just the volatility is shifted on it. They're showing fair value on it, but goodness gracious, how much are they overvaluing puts versus the calls on this trade? Right? So they're trying to make sure that if the market does make that shift, they're biasing against the move up, but into the move down. So, but that's what I'd be looking for. Steve, it's not that buying an option in a week is too risky. If I plan on holding this overnight, a week is too risky. Theta, time value deterioration, will crush you. Right? If we look at LMND, we look at the same puts. Let's find what we need. 65 to 85 delta right here. We have 340 by 4. Nice. Low price, right? But I have a theta of 44 cents, Steve, which that means is no matter what, today goes by as a day, we're dropping 44 cents in the value of this option overnight. $44, 44 cents on a $4 option. 10% goes away tonight. Tomorrow it will increase to 65 or 80 cents. And until we get to Friday, which of course all time value goes away at that point. So that's the thing we've got to be most concerned with is that. Right? Guys, listen. The trade setup that we're talking about here, the zero line breakout, is one of many options trades that we do. There's a training that I do once a month, and it's called Monster Market Movers. That Monster Market Movers training is $200. $199 is what we have it for. We have people that have been in this now we do it every month. People that have been with me for 7 and 8 years, they come to every one we do. Why? Because I give them brand new candidates. The trading opportunities are immense. There is 4.5 hours of prerequisite material for that, meaning there's 4.5 hours of training of all my trade setups in there. Every bit of them that I talk about. There's a zero line breakout. It's in there. The Fibonacci 4-step, Fibonacci channels, how we trade trends, how we trade the economic reports. All of that is inside of this in a members area that we have for this, plus a 2-hour live training, which happens to be tonight. Now, just as an FYI, I had no idea I was teaching this training today. I got asked this Monday. I spoke to Aaron Monday late in the morning, and he asked if I could come and teach this one today. So it's not like I planned this class for tonight. It just happens to be tonight. Guys, normally we have a $199 is what we charge for it. What we're doing, and I told Aaron we would definitely take care of you guys, $9.95, guys. You can come to this training tonight for $9.95. Go to my website and you will see Don't use the link I'm going to share with you. Go right to my website and go look at Monster Market Movers, and you will see it's $199. Right? No ifs, ands, or buts. Watch. Let's see. If we go into the store and we go into where do we have it? Nope, not there. Actually, it's on our members page. Easier to find it there. But let me drop here. Can you guys drop in that Benzinga link? Jen, could you drop that in as well? Aaron, if you're able to drop that link in for me, I would appreciate it.
Yep.
Thank you. So here's Monster Market Movers, guys. If you click here to register, it shows you, well, actually, this should have been changed, but you can see it's $199. They put this out for a special yesterday. This should have been changed over. But, guys, the link that we shared with you, you go down here, it's $9.97. Okay? If you're interested, awesome. If you're not, that's okay. We're still friends. Right? How do you find the theoretical value of the option, Prince asked? It is right on the option chain on TradeStation. Yeah, guys, this offer is only available to those of you at Benzinga. So, Steve, what you're talking about is a 2-hour training I did on options called Building an Options Trader that teach you everything you know about options, correct? Absolutely. So, Prince, you dropped it back in again. I answered it. It's theoretical is right here. It's part of the Black-Scholes model. Right? This THE, you can't see it all. Doesn't let me make it any wider, the columns, because of what I've got listed out there, but that's the theoretical value. Yes, from the Go link, Steve. There's a training that we do in there on options that is available. Same thing. We only give that Go link out to you guys. If you went to the Trade with Rob without it, that should not be popping up. This is just for Benzinga. Right? So good question, right? When is it? It's tonight, 8 p.m. Eastern. It is recorded for 30 days. So even if you can't be there live, guys, you've got all that prerequisite, 4.5 hours, plus a 20-minute video on all of my lines drawn on all my candidates, my fibs, my channels, my trends, all of it on there, plus the 2-hour training that's tonight. I don't trade puts. I'm afraid of them. You won't be after you learn how to trade them, Steve. It's critical that you learn how to trade these. Puts are just like calls. You think the market's going down. That's all it is. You put a stop on the trade just like you would on any other trade that you do. If you buy a stock and it goes against you, you put a stop on the trade. If you buy a call, it goes against you, you put a stop on the trade. You do the same thing with puts. Nothing to be afraid of. You do them on paper first. Great. I'm signing up. I'm very excited. Excellent, Lane. Excellent. Yeah, no, listen, guys, for $10, you can't make a mistake. You can't go wrong. All right. Clyde said, I am not allowed to day trade yet. Can I still be profitable options if and not raise my risk? Absolutely, Clyde. I don't recommend people to day trade when they're brand new. I recommend that you do more of a swing trade. Yes, Rudu, I'll still be here on Friday. Nothing has changed at this point. I'm still here Friday at 2 p.m. Options explained. All right, guys, what did you think? Was the training good? Did you get some good stuff? Listen, I gave you guys some phenomenal candidates. Some of those would be in my training tonight in Monster Market Movers. I gave you some phenomenal candidates to look at. Great opportunities in the market, right? Check out SPY. Check it out every single day, SPY. Yeah. I don't think there's a day that goes by that I don't look at SPY as a possible trade setup.
All right, Rob. Well, we appreciate. Hopefully, we get you at.
Woo! Aaron, you are wow, man. That is, you are definitely like a robot. You're breaking up big time.
Oh, really? All right. Well, then we'll.
Go back and listen to the recording, my friend, and see how you sound. But Learn from the best. I like the rest. Appreciate it, Clyde. Smash the like button. There you go, guys. Do that, please. Thanks, Ronnie. Appreciate it.
Better now.
All right, guys. I'm bugging out. I got my own training to get to now. You guys have a good day. Good luck on your trading. Happy trading. And I will see you Friday at 2 p.m.